Error occurred on Facebook. It's usually temporary. Okay. I'm going to click go live. We'll see what happens. Error occurred. So it's not streaming on my page. It's streaming on every other page. Fine. Good enough. So what's going on, Tim?
Brian, what is going on with the market is the question, man. You see what's going on, man? It's nuts.
It's not good, brother. It's not good. It's not good for anybody except for home sellers.
So you think the crash has started? Is that what your thought process is, man?
It depends on how you define crash. I would say if you're going to define crash as it's almost impossible, it's like the crash on the buy side of the buy house right now. Unless your expectations are 50% of your income is going to go towards your housing, and you're going to be okay with that.
So you're saying the crash has occurred because A, houses aren't affordable, B, interest rates, Brian, up another 0.5% just the last 10 days, right? C, let's talk about it. Unit sales are down 13.9%. March over March, man, state of Maryland. That is unfreaking real. That really is.
Yeah. And that was already down quite a bit. Like we're way, way down off the high. And the high wasn't like crazy. Like we're down what? You said 70% off the high?
Almost basically, based on my quick analysis, almost 70%. It is nuts, man. It really is.
Yeah.
So the question really comes down to, does that mean we're starting the crash, Brian? Is prices going to collapse? So what are we going to see? What is in your crystal ball? I know what's in mine, but what is your crystal ball telling us? That's the question.
My crystal ball says that the supply and demand issue is what drives house prices. There is no new supply, and there's continuing to be, even in the midst of 8% interest rates, a strong demand. So I don't see a crash, but I do see a lot of people that are not buying houses that would if they were more affordable.
So I agree with you. I think the lower end is extremely challenged. Number one, I think we are seeing price corrections on the high end, though. I think we are starting to see a little bit of a restructure on the price on the end, because it seems like things are getting a little stagnated, not seeing as much appreciation. But Brian, I have to agree with you. I don't think we're going to see a crash in the affordable marketplace because severe lack of inventory. I think you nailed it right there, right? But I think there are some areas that are seeing major corrections, whether it's California, Florida, Texas. And I think those are other influences at the same time. They're not just because interest rates are up, just because prices are up. I think that also has to do with things like, let's face it, ready? Insurance, homeowners insurance, to me, is one of the number one factors influencing the marketplace today.
So that's one of the issues, but I think that a lot of those markets, you'll read a headline that says, house prices are down 20% or something. Mm-hmm. They are in reaction to house prices going up 100%, where in the Maryland area, we're much more in the middle. We don't go up as high. We don't go down as low. We're much more stable because of the U.S. federal government, which funds all the people that live around here one way or another. Like you and I are essentially working off the teat of the U.S. government, and we're not going to see house prices fluctuate. There's not any major expansion of the government. There's no major shrinking of the government. There's no big job source coming. Everybody made a big deal about Amazon coming at one point. Everybody's house prices were going to go up. I think the thing that we saw that was the closest to that was when MGM came to Fort Washington. House prices went up and around Fort Washington a little bit. But there's nothing around here that indicates there's going to be any major changes. I think that it's just going to become harder. And I think that my advice, and we've said this before, is to be willing to be creative about how it is you're going to buy a house. And in that, you need to consider multifamily, or you need to consider renting out a portion of your house or a portion of your property, or Airbnb rooms in your house or your basement, something to be able to offset the cost. My son-in-law is going to settlement on Monday. We've been sort of talking about this all throughout our past, 10 or so podcasts. They've been looking since February, and, they're doing exactly what we described. They're buying a house that has an in-law apartment. They've already rented it. It's already pulling in $1,000 a month. Then he
Wow.
has a detached garage. He's pulling in $200 a month. He could get more, but he's doing it to a friend. So he's going to be pulling in $1,200 a month to offset his pretty high mortgage. But now he's going from renting for $1,600 to live in a basement with no windows. His out of pocket's going to be $1,800 a month, and now he has a beautiful house.
And he's got an
building
investment.
equity.
Let's call it what it is. He's built
And he's
exactly building
paying
equity,
he's out of pocket $1,800 a month. It's just
and he's got
incredible.
a tax benefit. Exactly.
You got to really
You
look
nailed
at
it
it
right
that way.
there.
Like, you need to really change your perspective a little bit when it comes to buying a house. Maybe you and your parents buy a house together, and you live downstairs and they live upstairs because of the stairs, or vice versa. There's a way to do it. We know a lot of people that have done it, and I think more and more that needs to be part of the conversation. I know people don't want to do it. Everybody wants 3 acres, a fence, no neighbors. Like, everybody wants that, but it's not necessarily realistic. And if you want to be able to survive and maybe, God forbid, save some money, you have to think of another way to approach this.
You got it exactly right. And the other thing I'll throw to you, Brian, I think this is insane, but we're looking at the stock market. It's down 375 points today. S&P is down. The big problem is that we have a lot of debt as a nation. And part of that debt is financed through treasury notes, and the treasury notes are just not being bought up. And so when they're not being bought up at the right percentage, what happens is it causes interest rates to go up even farther. And Brian, I'm going to challenge you on this. You're going to laugh. The feds might actually raise the interest rates this year. How do you like that one, man? Isn't that nuts?
Yeah, so I could take this hat off and put a tinfoil hat on, and we could be conspiracy theorists, but there's an underlying current to the market and to the economy that people don't talk about very often, because it's not politically advantageous for especially politicians to speak the truth. But the reality is our country is so far in debt, and we've kind of spent $5 trillion during the pandemic, giving people free money who all had jobs for the most part.
And now they're paying for it.
And that was just sort of like the topper on the ice cream sundae. And the reality is our economy is not healthy underneath all of it.
No.
And when we've seen the stock market increasing all these years, it has more to do with inflation and than it does with any sort of economic boom. Like, there's not like that much more being produced. There's not that much more money that's being created. It's just the government's been pumping money in. And I think the bottom part of society, the lower half, which is the other 97%, have been getting less for the same amount of money in general. But again, it does require perspective. It does require you to think about the fact that maybe 100 years ago, you didn't have air conditioner, a dishwasher, hot water heater, plumbing, maybe call it 150 years ago. So,
I don't have a dishwasher. I don't have air conditioning. I do have plumbing.
Yeah.
I'll tell you,
if anybody watching this can afford it, it's Tim. So let's not pretend like Tim is doing this anything but voluntarily, Tim.
Oh my goodness. You know what?
Are you saying you married a dishwasher, Tim? What are you saying?
No, I'm saying that you know what? We don't have a dishwasher because we're watching our well. I mean, it's called care and take care of the well itself. Number one, I don't want to replace a well at $40,000 a pop. You and I both know they're expensive.
Tim, it's like 15.
Hey, $1 is $1. You've always told me, you said every penny counts. And I recognize that, man. Oh, yeah.
I know you
I'm
do.
with you. Oh, yes, sir.
So my advice, and Tim, you can say whether or not you agree, is like, if you're thinking about buying a house, you need to really think about an alternative way to go about it, and look at a way to make money off of the land that you have, whether you're buying a farmette, you're going to sublease some of that out, or you're buying a house that has, I was looking at a house the other day, and the guy had it permitted properly, where somebody, there's no HOA in the neighborhood. You could rent out this huge garage that had like a 10,000 pound lift in it to an auto mechanic. He said you could easily get $2,000 a month.
Yeah.
So, they had its own separate driveway. Yes, you're going to have people pulling in and out of your house, but what's the big deal? You know what I mean? Like, if I could make $2,000 a month off my property without having to actually do any work, I would do it in a second. Like, I'm a little jealous that I didn't think about this as a strategy when I bought my house. I could have bought a much bigger house.
But you could right now, Brian. I mean, I will be honest with you. Tomorrow, you can Airbnb your house, but where would you and your family live, man? That's what it comes
Well,
down to,
I've
right?
honestly thought about it. Like, so my basement is unused. It has its own
Mhm,
separate deck. It has its own
mhm.
separate entrance. It has 2 bedrooms and a living room. It's well insulated. I don't hear people down there. I could Airbnb my basement out right now. I've thought about it. We might actually do it this year. So it's
And
not
so
like
you
that's
just
what
rent the basement part of the house because you're on
yeah,
the
it's a
water, right? I mean,
2 bedroom.
yeah.
Yeah, exactly. So we'll set up some kayaks. You can use the boat. I got a dock. You can use the dock. You can go kayaking,
See, that's a
all
win-win
that
right
fun
there, man.
stuff.
That would be
Yeah, you could bring some
phenomenal.
jet
Oh
skis to
yeah.
the house and go jet ski and do whatever you want. And it would be a great idea. It wasn't my initial thought when I bought the house, but it's like unused space that I could be making money off of, and I'm definitely thinking about it. But if you're thinking about buying a house, you should be thinking about it that way when you're buying it. Like, what if we don't use the basement and we Airbnb the basement, short-term rental the basement, or long-term rental the basement? Like, my daughter is moving out of a house. She's paying $1,600 a month. The guy lives upstairs. It's
Dude,
a
that's
huge
huge right
basement. It's
there.
like
And
1,100
that's a
square feet. So there you go.
yeah, and that's a lot of money, Brian. I mean, I hate to say this, but that's a win-win, man. It really is.
So
So
yeah.
no,
So
I see exactly what you're saying.
So houses will not become more affordable. If you want to call it a crash, you could say that buying a house is crashing. It's interest rates are going up and they're becoming more expensive. And it's now at a critical point where it's now become pretty serious, where people that make generally a lot amount of money, over $100,000, are finding it very
Mhm.
hard to be able to find an affordable house that meets their needs. So
And I think that's the key right there. I think any delay, honestly, I don't care what you're thinking. Any kind of delay in this marketplace right now is gonna result in you end up paying even more when things do turn around, Brian. I know it's
yep,
kind of insane, but you know what? Rates could come down to 5 a year and a half from now. And what's going to happen? Prices are going to go up because more people come in the marketplace. Every 1% is like another 5 million people coming out in the marketplace to buy. And I think those numbers right there, Brian, says it'll cost you more to delay the process than not to put your toe in the water right now and just see what the heck, right? I mean, that's what it comes down to.
absolutely.
Making it happen.
Absolutely. Yep. All right, Tim. It was a
Brother,
pleasure,
always.
my man.
Good to
As
see you, man.
always.
See you on
Have
the
a
other
great week,
side.
man.
You too. All right. Talk to you.